minutes, we're joined by Siddarth Bhamre of InCred, who joins us. Hi, Siddarth. Good to speak to you as always. Your take on the index first. Are you expecting a larger correction? There's a possibility that we go to the 20 DMA. Is that something you're factoring in?
Good afternoon, Nigel. Thanks for having me on your show. How market is shaping up, how data is shaping up, it is giving a mixed signal at this point of time. Generally, we would say FIs, if they have shorted 3,700 crores of index futures in two trading sessions, you become very negative on market. Dollar index going above 93.5, you should be negative on market. But we are not seeing commodities correcting big time. Crude oil prices are up. Then you are seeing base metal prices are also not giving their grounds. I understand there are supply constraints, and that is the reason these base metals and other stuff is up. But the correlations have so far not worked. And if in 2 days, if FIs are shorting such a large quantum in index futures, market should have tanked. But we are still not more than 2% away from all-time highs. And there are a couple of names like HDFC Bank and Reliance which are showing strength. And when I say showing strength, I'm not talking about today or of last 1 or 2 days. These are two most heavyweight stocks of our market, and these stocks, till the time they don't change their trend, I think we should discount some of the selling which has happened by FIs. At the same time, we are seeing that implied volatility has also flared up. 1% down and everybody start talking about big corrections, sub 17,000, big targets of 16,000, 16,500. So people are negative, market is not so negative. Yes, data is indicating that call writers are active, data is indicating that FIs don't want to go long. So we won't go long, but on this database, I won't create fresh short positions. So I'm in a wait and watch approach. But at the same time, there are a lot of stocks which are giving good indications to go long on, which is again not a case during a bear market. So I am not in a hurry to short this market. I'm more stock specific.
So you have two stocks, Cipla and L&T Finance.
Yeah. So you guys have been talking about how some of the NBFCs, housing finance companies, are doing well. Now L&T Housing Finance, last 3 days volumes are very high, and we have seen that stock has breached its downward trending slope, downward trending line, and that gives a lot of confidence to create fresh long positions over here. Mind you, we haven't seen any major change in open interest series on series, but of late we are seeing a lot of formation of long position in this name. So we are quite confident that irrespective of market scenario, unless and until market tanks, but if market is slight negative or flat or positive, this stock can do well from current levels. We have suggested this stock to our clients. The other name which I want to highlight is Cipla. Now Cipla has been outperformer within pharma space. Pharma space was underperforming as market was doing well. And now we are seeing that the open interest decline series on series in Cipla is very high. And stock is near to its a breakout level, which clearly indicates that it is quite possible the stock might move higher above this 980 to 1000 congestion zone and can move towards 1075. One can go long over here. Stop loss is not very far. 938 is the recommended stop loss here.
Siddarth, thanks a lot for those strategies.